Hello, good afternoon. Of course, my cat would take the opportunity to distract me right now. Uh, my name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective channel, where I help you make your dreams a reality. If you've seen any of my previous videos, you know that I love strategy and targeted strategy. And that awareness is key because I'm going to keep sifting through these financial memes using our investment strategies along with some everyday down to earth common sense. This is an unedited video. Who knows what else you'll hear in the background as I film these in my house. I'm not a financial advisor. I am a financial strategist. And normally the closed-end fund disclaimer occurs before the financial strategist part. But this week, it's last because I'm going to reference our portfolio. So here's what you need to know. This is why I like closed-end funds so much. The discounts. There are crazy discounts. And who doesn't love a good discount? So if you want to pay the going rate for something, or if you want to pay more than what something is worth, great. But me, I like discounts and not piddly discounts, like crazy discounts. I also like the dividends. There are amazing 8% plus dividends, and that's an average. I think the current average is 8.3% across 419 some odd funds. So you have some funds that pay zero. We have a fund that pays 18% consistently. Uh, you get opportunities across every sector. If you like, I mean, there's the general sector. If you think of, uh, if you think of real estate, materials, consumer, healthcare, utilities, energy, that stuff. But it's really any type of investment focus that you want to pursue. There's an option for that. And closed-end funds are about the it's almost like a mutual fund where you've got all these different investments compiled in one portfolio, except you're getting an insane, or you have the ability to choose the insane dividend that you want to pursue. You can pick portfolio in a can where it's kind of a little bit of everything. You can also just hit one thing. And like right now, the bulk of the herd is pumping money into technology. Sorry, cat distraction. Um, the bulk of the herd is pumping money into the technology market, and they're pumping it mostly into bigger name companies, Microsoft, Apple, Nvidia. But there are a lot of other companies, really every company, that needs technology in order to thrive in the current market space. But it also means they need uh, the ability to transfer data. So they need the microchip, and they need data storage, but they also need a cloud interface, or they need an ability to connect to the internet and share data from point A and point B, but also back and forth. So technology is not just the microchips, it's everything. Let's see, off track. Uh, so opportunities across every sector. There's also, from my standpoint, it's a lot much lower risk because you've got this fund investing in all of these opportunities, so you don't have to buy everything as single funds, and you get much better payouts. So instead of buying single stocks, instead of buying Microsoft and Apple and Nvidia and Google and Meta individually, depending on the fund you invest in, you're getting access to all of those companies and you're getting a better dividend. So instead of single stocks, mutual funds, index funds, I like closed-end funds a lot better. You also get improved upside as the discounts close. Now, the every company, their goal is to grow the company. And for us, I mean, yes, we want that capital appreciation, but we also want a consistent dividends. Regardless of where the market is on the current wave of things, we want a consistent or a rising dividend. So if and there's a company selling for like 52% off, so for every dollar invested you're investing 48 cents for every share you buy, which is crazy. um, but we don't want that perpetual 50% off discount. We want that window to close, which means the cost of shares will go up. It also means we get a consistent dividend as it goes. And then if they raise the dividend, that's amazing. So closed-end funds, you can buy in any portfolio, meaning if you've got an individual account, if you self-direct, if you have an IRA, if you have a Roth, uh, it's a very, I mean, unless like as a teacher in a 403(b), we're pretty limited on where we can invest. But outside of that, it's a pretty accessible investment that you can use in almost any fund. Uh, so what's our long-term strategy in general, investment strategy? We adhere to the strategy unless you've got a good reason to not adhere to it. It's very much like what Barbosa says in Pirates of the Caribbean. The code is more of what you'd call guidelines than actual rules. But here's our code as it stands. We buy historic discounts, which means you have to do your homework or you let me do the work for you. We focus on consistent and rising dividend payers. So when and how those dividends get paid matters. Do you want monthly or another setup? Lately, we've been pursuing monthly payers, but we do still have some quarterly payers through our individual brokerage account. We're mindful of the dividend yield. The focus, quite honestly, the focus has been 9% or more, unless there's a good reason to buy something that's paying a little less. We want to use the grander scheme data that's been synthesized into our microcosm so we can weed through the options. That means you have to know your focus and you have to be willing to move away from the herd. I get that technology is the current golden coin and everybody's moving towards that shiny object. But where the herd is not, there are amazing deals. And when the herd switches back into those other sectors of the market and technology drops out, that'll be a great time to scoop technology. And maybe this is confusing because it really is like a highlight. So if you want more information on our closed-end fund system, I get into the complete details of the system as well as the macro to micro data on my closed-end fund videos. So as I make these overall investment strategy videos, I'm critiquing memes and emails and random stuff I find online. But as I critique them, I'm not out to slander anybody. I'm just interested in separating the good from the bad when it comes to financial advice, because none of us want bad financial advice as we navigate our finances. So let's attempt to get into this. I have a lot of tabs open because we've got a lot to share today. So change this bar a little bit. So this is my Pinterest page. We're going off of this board. And towards the bottom of this board, which I've covered a good amount of memes already, towards the bottom of this board, we're on this meme. We're actually in a section of the board where it's going to take a little more effort on my end to counter the information in these memes. So we're here, and it looks like this. And I mean, there's lots of ways you can get into real estate. It just kind of depends on where you want to go. I really do. I like Kiyosaki's breakdown of things as it pertains to, I mean, yes, the rich dad poor dad mindsets, but also incomes. I mean, there really are just three types of incomes. You've got like personal income, full-time income, what you accept, what you relate to your job. You've got portfolio income, what you make in the market, but then you have passive income. And what gets labeled as passive income by a ton of just side hustle creators, I mean, like Canva digital prints, Amazon KDP store, any type of course you make, all of that gets labeled passive income, but it's not because it's still income you pay taxes on. Portfolio income is still income you pay taxes on. Now, my tax guy likes that type of income based upon the general income that comes with your job. It's just that it's a leveled up type of income. But when it comes to real property or owning investment property, it's passive income because it really does just happen. Now, there's oversight that you have to do. And yes, you can have a property management company that does some of that, but then you also have your own general oversight. But if depending on how you set it up, your your personal property. So like this, residential, so single and multifamily, which that would still be residential, but single and multifamily, this is a little different. So residential might be your primary property, which you can still leverage to get into real estate. You have single family homes, you have multifamily homes. Apartment buildings are multifamily homes. Commercial can still be multifamily homes, but it could also just be commercial business, industrial, retail. And then REIT is a real estate investment trust. A lot of these overlap. Um, it depends on where and how you want to invest. So if you want physical property, you can own. So residential, yes, you can own your own home, but you could own an investment property for a single family home or a multifamily home. You could also own a whole building. You could own a commercial center and have Amazon rent from you. Industrial, which could be considered Amazon, or maybe there's a shipping like an actual 18-wheeler company that operates out of your place. Retail, so if you think of any little strip mall, there's generally a donut store, a clo like a cleaner's store, there's a nail salon, and then that fourth is kind of a mix of any number of things. It could be a Subway, could be a coffee shop, could be grab and go for dinner. Like it could be anything. Um, so it just depends on where you want to start, or if you want to get into this in general. On our end of things, we are invested into real estate several different ways. We have the equity of our house. We own a rental property. We own a single family home investment property. And we're also invested into the stock market. And I kind of want to show you, and I'm not going to show you our mortgage and our payout there, but we do have a decent amount of equity in our house we could leverage if we wanted to. Into the stock market, I'm going to jump screens again. So we bought this fund a while ago, and it's these are all closed-end funds, or at least this one's not, but we'll get to that. So IGR is a closed-end fund. It's 100% invested in real estate. They manage about $1 billion in assets, and I like this Morningstar Portfolio Center because you can see a little bit more data than what's on the closed-end fund connect or the CEF connect. So based on their portfolio, I mean, they don't have any bond holdings. They've got something else that probably private investments. But the stocks they're invested in, first one is Realty Income Corporated. Everybody that say every time I watch the financial talk show circle junkie people, somebody mentions Realty Income. And I don't watch them that much because they all kind of say the same things. But somebody mentions this company. And if you don't know what it is, then you can click on it on Morningstar. It'll show you the data. But then the second one breaks down what the company does. As to what it's currently doing right now, the online investor, you enter the symbol. It gives you some first page info. You click on the graph and it takes you to this page. So currently selling for $52 a share. It's going to pay you about 6% monthly. But at $52 a share, You can scoop up IGR right now for about $5 a share. So you get 10 shares as opposed to one of just that one company. But in our system, in our closed-end fund system, IGR doesn't hit the metrics right now. And if you want that information, I get into that in my closed-end fund videos. But instead of buying all of these different companies and getting random dividends from them all and paying a ton of money to get into all of these different companies just to get diversity in the realty scope of things, or in the real estate scope of things. My cat is having fun with the window. Um, you can buy IGR and get immediate access to all, or have investments in all of these different companies. You get a much better payout, much better overall portfolio value, to the point of, and yes, this is our closed-end fund system, IGR. So it's in blue because we own it. It's asterisk because it's a dollar cost value based on our current holdings. And the triple asterisks make the consideration list every week, but it's still about $5 a share right now, which means you can get a lot of it instead of just getting one share of this company. Other funds we own. So we own IGR. They own this company. We don't directly own this company because it's not a closed-end fund. We own this company. And based on the schedule, or based upon the system, it has the highest discount. It's been fluctuating. It's gone at almost 53% off. It's gone down to 50% off. It's a it used to be like a heavily invested bond company, and then it switched to real estate. And a lot of their real estate system has not come up, like it's in progress of development. And it's that uh, move away from bonds into real estate happened so fast, or I guess so recently, that Morningstar and that CF Connect website don't have the current accurate data. So I have to go to their website in order to get the current accurate data. And feel free to pause the video and just check out this one screen. It's all real estate, just in various metrics. And I mean, I'll stay on this a little bit. Feel free to pause the video and read this if you're interested. But a lot of their stuff is currently in the works. I find this one interesting. And the other that we recently picked up is this one. It's still 100% in real estate. And I love the IGR portfolio. It's a global fund. You get a lot of access globally. Yes, like it says, this one does the same, but I almost like this one better because of what's in their top 10. So here, I'll click on these. American Tower is a cell phone uh, conduit. I can't think of a better way. There's a toll bridge. There we go. It connects it connects your cell phone provider with a tower so that your cell phone has access. Pick your cell phone provider: Verizon, Xfinity, Comcast, T-Mobile, Mint. Um, yeah, pick your provider. Most companies don't operate their own cell phone towers anymore. They rent space through American Tower or Crown Castle. They build cell phone towers. They lease them out as property to all these other cell phone carriers, wireless providers, and it's real estate. And these companies in this portfolio Yeah, logistics. Uh, well tower. Yeah, medical properties. Simon property would be like a mall, homes, digital realty. Yeah, real estate investment trust. Equinix, data center. Crown Castle is, yeah, extra. I love this portfolio. And RQY does not go on sale, it does not go on discount that often. So the discount you see, we can look at this based on last week's data, or say end of the week data. RFI, RQI, was I looking at the wrong portfolio? I was looking at the wrong portfolio. We'll go back. Raw video, sometimes you make mistakes. There we go. Still all real estate, small company. Instead of a billion, you get 300 million, which is still big. And it's a lot of the same stuff. American Tower, Prologis, Welltower, Simon. I want to say it's the same top 10. And similar on top 20. Yeah, similar on the top 20. We didn't look at that. Yeah, so wrong company. This is the right one. RFI does not go on sale that often. When we got it, it was just like one and two-thirds percent discount. But if you look at it based on the end of last week and not on, I mean, this is, to be honest, I'm recording this on a Tuesday, so this is based on over the weekend opening day for Monday. When we bought it, instead of paying, if we make a break even $1, when we bought it at like 1.67 off, you're paying uh was it 98.3 and or say 98 cents, so 0.983 per share instead of $1. But now if you buy it, you're buying it for $1 or $1.015 based on the current percentage every share. So now you're paying more for what it's worth. So based on company, we're looking at discounts as related to individual company data. So just because it's got a crazy high discount doesn't mean it's a great option. So every week I go through and review the data and then give you picks based on, or give you explanations of what we're picking based upon the data. And this was the initial screen view for last week's video that we sorted down and we whittled down based on current market data and long-term projections. So getting back to that one, there we go. So market-wise is one way we're invested into real estate. The others outside of our general primary residence is we own a rental property. We own a single family rental, or we own an investment property that's a single family home. And we were lucky, blessed, however you want to say it, to find this spreadsheet online, and we paid for it, and then we tweaked it to fit our needs. I love a good Excel spreadsheet or a Google sheet in this case. And some of some of the metrics I would not have been able to create. So we paid for it, like $30, and we tweaked it to fit our needs. And we looked at property in Texas. We've looked at property in Arkansas, Oklahoma, Louisiana. The rental property market in our area has just blown past our initial funding, and this allows us to really sort through and sift the data pretty easily based upon purchase price, or I mean, all of this automatically gets calculated based on what's already in the data. So if your purchase price is 250 and you're going to down pay us, we ended up at 25%, but if you're going to down pay 20%, like what you would put on your house, um, yeah, this is part of the data that we went through on what we ended up buying. We paid down our interest rate, and then based on your expenses, so your annual expenses for taxes, your insurance, things that get factored into your overall loan payment. Uh, we looked for a property without an HOA, and then based on general age of the property, we went for a higher percentage of maintenance and vacancy, which are both business expenses. We look at overall management, which is a business expense. That's not an, I don't think that's the current umbrella policy total. Actually, we didn't go for umbrella. And then you look at the overall rent. So whatever you think the house will rent for in that market space, it'll calculate general income. Now, profit is not income. Um, you get a lot of deductions as a business that you don't get as a person, and any type of business expense in this regard. So uh, the benefits of owning property, the benefits that you, or want to, how do I say this? The benefits that you don't end up using really, they pass through your business and they impact your personal taxes to your benefit. So if you own your house and no other type of property, your utilities, your say the taxes on your we'll say so your utilities, so power, water, trash, plus your phone bill, any type of repairs to your house, all of those don't help you, but like you don't get to deduct them. But once you own a business and run the business out of your house, which is kind of every individual LLC, all of your general expenses, water, power, cell phone, internet, identity protection, trash, any type of home repair, all of that stuff becomes a business expense. So, like care of your vehicles, mileage, business expenses. So you have the general business expenses here, and then they pass through into your personal taxes and they help you on your personal taxes. So you have general income. You, yeah. And then we're looking at cash flow. We wanted at minimum a neutral cash flow, which would still be positive because it's not negative, or positive cash flow. So based upon your purchase price and your down payment and your rent and your other general expenses, you could project a cash flow. So we'll lower this again. 230, we'll increase that. Getting better. Closer. These are out-of-pocket expenses. Yeah, so now we have positive cash flow. And I'm not saying this is what we ended up with. I'm just using it as an example. But as a business, this interesting thing. So you can make donations from your business and it be uh, helpful on your business taxes. As a business, you can also pay your kid, uh, and you can label it however you want, however your tax guy tells you to label it, really. But it really is just a line item transfer monthly or whenever you decide to instigate it or initiate it. You it's just a line item transfer from your bank, your business bank account to your kid's account, and you're documenting that on your business ledger. Maybe you're documenting that on your kid's ledger if you have one. And then that's it. That's all the IRS wants to know. It's just where the money went and how much. You're only allowed to transfer or give your kids so much from your business a month. And then you can use that to offload profit or really offload income, really offload profit because you're taxed on profit. So the goal is to decrease your taxes legally as much as possible. So yes, you have income, you have all of these expenses like your mortgage, then you have business preparation expenses, maintenance, uh, AC tune-up, heater check, dishwasher goes out. We had a $600 part on an AC break. So all of those are business expenses, and you're trying to save up for them. So it's not just coming out of your reserves or your account in general. You have management fees, which are deductible, and you're getting your overall gross income minus all fees to get whatever general yearly cash flow. And yes, it's not making you a ton of money overall a year, but you're also getting a lot of other tax incentives. And if you want a better breakdown, because I'm not going to get to it on this video, but if you want a better breakdown of the benefits of owning real estate, then check out my Facebook page. And I'm talking about that right now. I'm posting about how we bought the first property. I'm actually posting about it the second time. I've gone all the way through our 12 steps to financial freedom once, and I'm currently in the second uh, journey through the same 12 steps, or the second explanation of things through the same 12 steps. And I'm based on my post today, and I mean, I, I I schedule post out, and that way they just kind of auto post for me. But based on the post today, it's how we bought that first property, and it's the backstory to it, as well as what's happened since then. So getting back to this, it really is, gosh, there are so many benefits to investing in real estate and actual real property. But if the real property side scares you, you have some stock market options on generating uh, better than inflation rate returns. And if even that scares you, owning your own home increases your overall net worth. It increases your risk. I mean, as a homeowner, it increases your risk because anything can break at any time. But if you can gain equity, then you can leverage that equity forward into something else. You just have to know what you want to do with it. And if the stock market scares you, or if owning physical property scares you, at the start of your journey, I would say that's kind of the mindset everybody starts with. It's you're doing something that you haven't done before, and probably nobody in your family has done before. So being scared of it and being cautious, that's a good thing. But the more you research, it should tamper down your fears. And it's still going to be scary when you buy the first one because you're starting something that you haven't done before. Uh, every time I buy stocks in the market, regardless of what the market is doing at large, regardless of strategy, regardless of what I'm buying, it's always a little scary because you see the money and it's like, man, this is scary. Or when we bought the first house, and I say when we bought the first because we have plans for more. Um, we bought the first, it was scary. That's something that no one in any of our families has done before. Um, we had an aunt and uncle buy a condo, and they tried the short-term rental, and no one in our family has done the uh, long-term game plan for investment property of owning a single-family home for the long-term benefits of owning an investment property. And nobody's ever bought the first, and nobody for sure has ever bought a second. So we're doing something that nobody in our families has ever done. I'm sure there are people in our family that just don't get it, and that's okay. A lot of the people who will naysay what you're up to have never done anything that you're trying to do. So you listen to them if you want, uh, and you let your progress silence the naysayers. You just got to know what you want to do. So it really is. I love these strategy videos because it really is all about strategy. And like I told an aunt today, it's the beauty of this capitalist society. It's not, people don't like, when most people say they hate capitalism, what they really mean is they hate corporatism. They hate the idea that corporations build products that break and then make you rely upon them to fix them. That's what they hate. But they lack the terminology and education and knowledge to debate actual principles. So they just say they hate capitalism because all capitalism is evil. Yeah, yeah. You say that on your cell phone that you shop for. Sure, sure. So the beauty of the capitalist society is you control your own financial destiny. Now, everybody's got limits, right? But also, everybody has ability. Everybody has the opportunity to level up your financial freedom. And part of that comes down to knowledge, part of that comes down to wits and wisdom and how you go about it, the overall strategy and structure of what you're doing. Uh, it comes down to how much you're willing to do. Are you willing to do something that nobody's done and take on and manage that and the stress? And if you're willing to change your life, it's not going to be easy. Easy is doing the same thing every day and never wanting out of the system. It's the rat running on the wheel, hoping not to get plucked out by the tail and used for some other type of experiment, just to be put back in the same cage and live however long it's going to live. That's easy, but that's not us. It's not that we wanted more. It's not a greed game. It's not an envy game. It's the search of more freedom. And it's the search and the journey of learning how to do more with more. It's not the ongoing quest of more. That never ends. You gain more and you hoard more and you store more and you never do anything with it. This is the goal, to do more with more. Our goal is generational wealth. Our goal is to accomplish our dreams and help our kid out as best we can. It is the ongoing journey to do more with more. And if you can't manage your finances now, you're not going to do well with more. So you learn how to improve what you already have. You give yourself a lot of structure. You set up your structure and your goals, figure out where you want to go. And then it really is this just ongoing quest to accomplish your dreams through your strategy, which can be different from our strategy, but it's the ongoing quest to accomplish your dreams using specific strategy that always improves. And then you're learning as you go. It's you're learning to do more with more. And will it be easy? No. Will it be challenging? Hell yes. Will it be bumpy? Like, I think I know what I'm doing, and then something else happens. Yeah, there's a huge learning curve. It really is adapting your perspective as you go. I chose the name of my business for a reason. I mean, it really is adapting your perspective to all the other possibilities that are out there. So investing in real estate gives you a ton of opportunity, a ton of opportunity. You just got to figure out how you want to get into it, and maybe figure out if you want to get into it. But I would tell you to figure out how to get into it, and then figure out a strategy long term that gives you an ability to break out of your current system and into another. Real estate really does allow you to level up your finances. It levels up your overall net worth, which then allows you to buy more property. But if you play the game, if you really want to break free and gain financial freedom, real estate is the way to go. There's other things involved. There are other things that'll help. But if you want that long-term wealth that will grow and that where you can build it and then hand it off like generational wealth, real estate is just it, it's fun. It's fun on the management side, but there's no other. I don't know another investment vehicle that promises so much and also allows you to succeed so well. Put it that way. Is it risky? Yes. Uh, is it bumpy? It can be. Can you get in a hole bad? Oh yeah. Oh yeah. But there's so much promise if you're just willing to search it out and look into it. So yeah, I don't want to paint you this golden picture that everything's amazing and everything is this. It's challenging. I want to be honest with you. I want to be transparent with you. But if you want to know more about real estate investing and how we did it, then check out my Facebook page, Navigate Your Finances. If you want to learn more about investing into the stock market at a discount and getting incredible dividends, then check out my closed end fund videos. And then if you enjoy the ongoing strategy and partly my rambling, but if you enjoy the ongoing strategy, then by all means continue to watch my videos, like the videos, and then help me get the word out. Uh, yeah, and just help me get the word out that you really can strategize and sift through all these memes and that it's important that you do so. So if you like the content, consider subscribing to my channel. And if you want more info, then either go to Facebook or check out my closed end fund videos. And as you approach the rest of your life, whether weekly, monthly, whatever, you're the captain of your ship. That ship will go wherever you steer it. It will wander aimlessly if you do nothing. But wherever you're willing to go, it will go. You just have to point it and give it direction. On our end, and what I talk a lot about on my Navigate Your Finances page on Facebook, if you know where you are and you know where you're going, that makes your job as captain a lot easier. Doesn't solve every problem, right? But if you know where you are and you know where you want to go, then it becomes your job to point the ship and make it happen. If it could happen on its own, it would have happened on its own, but it hasn't. Your retirement exists out there. Your dreams exist out there, and it's possible to reach them. You just have to be willing to point the ship and do the work involved. So that's all I got. This is Daniel Young signing off. I will see y'all on another video. Bye-bye.